Alright, this is going to be a quick video about today's trade. Um, I will quickly outline, and this is in replay mode so that we can see exactly how you could have entered this trade and what confluences I took to have this trade. One thing I will probably outline now is I did not get full take profit. I did close the trade a little late because we got edged like by one tick. So that happens sometimes. It is what it is. So what I'm outlining right now is this is of course in hindsight, but we had dumped early 9 o'clock, right? So in this candle you'll see that we dump right before the 10 a.m. kill zone, right, which is 7 o'clock here. Since we are within this price level, originally I wanted to see longs because if we wanted to support this idea of being bullish, right? So remember, there's a position in the marketplace that someone went long and is holding for all-time highs. So because there's resting positions here, that's why liquidity would come down into these positions, this lower resistance liquidity, to generate more movement in the market so that it could reach its intended price and price action. So we'll go down to a 5-minute time frame. This is the turtle soup level, and this is a 1 hour fair value gap for longs. Okay, that's what's important, that this fair value gap is for going long. So if we want to go long, we have to respect that. And when I mean respect it, we want to tap into equilibrium, right? Or at least within these quadrants, right? But I won't keep this because it's going to make it messy. Just visualize it for yourself. All right, getting into the trade now. You have your 9:30 open, right? So all this price action is supposed to be the Judas swing. So this would be in alignment if we were bullish, right? How people got stopped out was outlined just like this. You have your accumulation in this area. Now this is a 15-second time frame, so this is probably only about 5 or less minutes, right? But visualize what I'm about to explain to you. You have the 9:30 open time, Judas swing, supposed to be manipulation of the real intended move. So since we went down Judas swing, typically you would be expecting prices to rally due to the down move from the Judas swing. It'd be vice versa. If you were bearish, you would want to see the Judas swing up into price action, and then a higher time frame PD array, and then catch the short. So in this case, Judas swing comes down, still supporting longs. However, when we come down into this hour fair value gap, right, we tap cleanly right on it, right? at 10 o'clock. Do you see the correlation of how important time is right at 10 o'clock? Tap cleanly right into that fair value gap. However, we come down to this turtle soup level, right? If we were going to be longing, we should have passed through this, right? But because we came back down to this 50% level and honestly kind of chopped around it, as well as this fair value gap, it created a lot of PD arrays that disrespected the idea of going long. And that's first the rejection of turtle soup. Turtle soup rejection. You then also have to visualize the higher time frame. This would be inverse fair value gap slash a breakaway gap. Then you have your fair value gap entry. Right, so because of these two things, or three things I should say, price opens right at 10, kill zone time. The intended move is supposed to happen at 10, right? So price will start to fix itself to reach the right move. And I'll explain in more detail of why this was not the right time to long. And it's because price was not in its proper area to long. So we get that rejection off turtle soup level, right? Breakaway fair value gap, inverse fair value gap entry. As soon as price dumped past this candle wick, I immediately wanted to enter based off of this 25% level, right? If you're imagining the quadrants, this is 50, this would be 75, and then this would be 25. So because price already had started moving below 25, that's why I entered. And I was expecting this strong displacement right through it. Held it for quite a while, missed TP, and then we had our exit about here, being an entry like this. So that was a trade, right? Price wanted to dip down into a more of a discounted price before it decided to rally over the course of today, right? So that was when we took that trade, that leg down. But then from that point in price, we've rallied, right? And a comment that I made to my student was that around 8:30ish, which was 11:30ish, I said this would be a good opportunity to long. If you had held your stop below the low of this wick and longed, you probably could have survived that small amount of drawdown to then catch the whole move, as well as enduring this retracement, right? Because it's all psychological conflict. You're not really losing anything, but you think you're losing something. But that was the trade recap for today, and hopefully a bit helpful on how to change your bias, right? Thinking we were already in a discount, but because those PD arrays presented themselves and we were patient waiting for a setup, it avoided us that loss, and we were actually able to catch that move downwards to a proper uh, level, which we were waiting to sweep all of this liquidity to generate the move back up, right? And I'm intending that tomorrow we probably continue rallying because there's just too many resting points of low resistance liquidity, right? Or a ticking time bomb, essentially. But with that, guys, I hope you enjoyed. I hope that was helpful. Have a great day.